Frontline stocks see range trading, but mid-caps put on a good show. Overall, markets doing slightly better than what it was yesterday. Healthcare and consumer durables are the big gainers, even as FMCG and realty see some lags.
Honasa Consumer, owner of the Mama Earth brand, sees a large trade of nearly 11% of its worth, over 1,700 crores. Private equity investors, including Peak 15 partners, are likely sellers. The sale at a discount hurts the stock.
The cabinet clears a new 10,900 crore rupee incentive scheme for electric vehicles, PME Drive, which replaces the earlier FAME. Besides two-wheelers and three-wheelers, e-ambulances, e-trucks and e-buses will also be incentivized, as would charging infrastructure. But there's nothing in it for the passenger four-wheelers.
Bajaj Housing Finance's 6,560 crore IPO gets subscribed nearly 64 times, with the QIB portion, or the qualified institutional buyers segment, seeing an oversubscription of over 200 times. That's a stellar investor draw.
Interglobe Aviation-owned Indigo Airlines will become a global airline by 2030. That's the word coming in from CEO Peter Elbers, who tells CNBC-TV18 in an exclusive chat that he expects 30% of revenues from international routes this year.
Hello and welcome to Halftime Report. I'm Ekta Batra and with me is Mangalam Malu. Well, it's turning out to be a session where we are seeing some amount of upside, probably enthused by the CPI data on a headline basis, which came in from the US. And that was the fifth consecutive month of a decline that we saw the CPI data, fall in the US, and in fact the lowest that we've seen since Feb of 2021. We do have the CPI data back home to watch out for as well, and that's expected to come in at around 3.42%, which is expected to be the lowest in 60 months. So that piece in terms of the macros seem to be looking good, and that's probably working its magic on the equities.
Let's see whether that magic continues or not, because, over the last couple of trading sessions, what really stand out is that upwards of 25,100, the Nifty is facing some sort of resistance. And today in the second half, we will have the Nifty options expiry playing out as well. But if the broader market trend is something to go by, we may brace ourselves for a bit of a melt up in the second half as against a meltdown. Why do I say that? Because yesterday, same time, the distance between the advances and declines, those lines, that gap was narrowing. But today, from the start, if you look at both the crisscross lines, they've maintained their gap and they are parallel at that 1,500 stocks advancing for just about 950 stocks, which are declining as well. So let's talk about all of these individual stocks itself. One of them, which is under pressure, is Honasa Consumer, a large block deal that took place today. Nimesh joins in with the details of the block deal, and then we talk about the fundamentals of Honasa as well. Nimesh.
Hi, Mangalam. So, as you rightly pointed out, the stock is under pressure, largely on back of a large block deal. So, the private equity investors sold 11% stake via block deal today. In terms of buyers, I understand a mix of both domestic and FIs have bought. Interestingly, the domestic mutual fund holding is quite low in Honasa, just 3% before the block deal. So, looks like they've participated in this block. Now, the combined holding of all the private equity investors is close to 39%. They've sold 11% in today's block, and now there is a 60-day lockup. So, further selling cannot happen for next 2 months, but that overhang is going to continue. The fact that the Ps are sellers there. The biggest private equity in that is Sikova, and they've been selling aggressively in other holdings as well. Looks like there is a bit of slippage as well, because it happened at a discount, and hence you're seeing the stock under pressure. And of course, valuation is also a bit of a headwind, at least at these levels.
Take that point, Nimesh, completely on the valuations front, because, the stock, while it is under pressure in today's trading session, if you look at it from its IPO price, it's still upwards of almost, 50%, 52% from its issue price of 324 odd rupees. Currently, the market cap at 16,000 crores. If you look at the first quarter revenues, the company showed a revenue growth of 19%. The EBITDA expansion is something that the streets really like. So if you look at, the margins, they've improved from about 6.3% to about 8.3%, and the net profit as a result of which grew by 63% as well. The management for this year has guided for a revenue growth of 20% with 150 basis points margin expansion. So if you look at, the guidance that the management's given and the first quarter numbers, extrapolate those numbers and annualize them, you would see that the stock at current levels is trading at 90 times FY25 price to earnings, and this at a time when all the other FMCG staples are showing signs of recovery. So maybe the street is betting on a shift towards the traditional staples as against the high growth Honasa Consumer itself. But having said that, there still are a bunch of triggers. Scaling the Dermaco and Aqualogica, their second and third brands as replicating the Mamaearth success on that would be a big positive trigger. And secondly, currently it's largely an online player, right? They have been increasing their offline distribution as well. So that could be another leg of growth. They are looking to double their offline distribution to 2 lakh retail outlets through FY27. That's something we'll be keeping an eye out on. Just about a month ago, we had a Goldman Sachs initiating note coming in on Honasa. They expect revenues from FY24 to grow 2.5 times in FY30, and margins as well from 17%. They expect that to go all the way up to 14%. But that's an FY30 story. For FY25 and FY26, trading at around 90 to 75 times 1 year, 2 year forward earnings. Maybe this could have been an opportunity for all these private equity players to book some profits.
Okay, all right, Manglam. Thanks very much for that. And what is it, up 50% from its issue price?
52%.
52% from its issue price. That's Honasa for you. We'll take a short break. We'll connect with the management of Mass Financial to discuss their FY25 outlook on the other end. Stay tuned.
Welcome back. The Nifty is holding around that 25,000 mark. Bajaj Auto, definitely a stock that stands out. Over the last couple of trading sessions, the stock has rallied about 8%, currently moving towards the high point of trade once again, revving up. And the other one that really stands out on the way up is Page Industries. Was a big mover yesterday with decent volumes, and today as well has seen a fair amount of traction. So Page Industries as well comes up for you, currently at the high point of trade, sitting with a gain of almost 4%. If you look at this week's gains on that stock itself, it's up around 8%. But this week's gains have been near double digit for Zomato as well. Zomato is another stock which is buzzing around, and that today's move can perhaps be attributed to one of the notes that have been coming on Zomato. Multiple brokerages, very positive. Today's note comes in from UBS, where they have a buy rating and a target price of 320. They've calculated the industry volumes for food business in August 2024, and they've said that industry volumes grew about 2.5% month on month if you adjust for the number of days. On a month-on-month basis, while the industry grew 2.5%, Zomato grew 1.8%, and the growth was led by Swiggy at 3.1%. Should investors worry? No, because this constant monthly tug-of-war, pull and push continues to happen. Because if you look at, the August volumes versus December 23, from the start of this year to now, Zomato has actually grown 25% versus Swiggy, which has grown about 18%. So Zomato continues to maintain their edge over Swiggy. In fact, for the second quarter, they expect Zomato's food GMV growth at around 7% quarter on quarter. So they remain positive. This is as far as the food delivery business is concerned. Obviously, the optionalities would be the Blinkit business, along with the going out business that the company has recently acquired from Paytm.
Okay, well, it just goes to show the trend of talking about the newer listings. You just spoke about Honasa, and now you're talking about Zomato. So that's probably where the flavor lies. But let's talk about one particular business which never goes out of fashion, and that's on lending. Mass Financial Services is the first management on the show. The company has reported what was a decent set of Q1 FY25 numbers. The assets under management, for example, was up around 25% in the quarter gone by. In fact, DAM Capital has a buy rating on the stock and expects the company to deliver 25% near CAGR growth. To discuss this and more, we have Dhwanil Gandhi, who's the whole-time director of Mass Financial Services with us. Mr. Gandhi, welcome to the show. Well, let's just start by talking about your breakup in terms of a book. I was looking at your Q1 numbers. Micro enterprises was up around 12.5%. You had your SME book, which was up around 23%, two-wheelers, which was up around 17-odd%. Give us a sense in terms of how exactly the rural market is doing at this point in time. Some of the lenders have indicated that there is some amount of pain, especially in the MFI and unsecured lending segment. Give us a sense in terms of what your takeaways have been and whether this kind of growth momentum is going to continue.
Hi, good afternoon. Yes, so if we talk about the asset mix for Mass, currently I think we have around 80% of the business coming from our MSME business. We have two products under there, micro enterprise loans and SME loans. And we also have two-wheeler, commercial vehicle and salaried personal loan. So if we talk about the configuration, 80% is MSME, and the rest 5-7% is from SPL, and the rest is from two-wheeler and commercial vehicle. We are seeing good demand. If you look at our last quarter's MEL growth is upward of 12.5%. SME is growing robustly at more than 20-23%. We are seeing good demand at the ground level. Yes, there has been some pain in the MFI segment. There has been some reportings from certain companies where the credit cost has gone up. But we are not directly in that working in that segment. We are working 2 or 3. Our customer segment is 2 or 3 notches above the MFI sector. So I think overall the demand is robust. We are seeing good demand in this quarter as well. The 2 months that have gone by, and we are expecting to close this quarter strongly as well.
All right. Dhanil, first off, congratulations on being appointed as the whole-time director of the company. We've been having a lot of conversations with Kamlesh before this as well. The growth target that you've, planned out for this company is 20 to 25% AUM growth on a consistent basis. You said that you are likely to close the second quarter on a good note. Could you give us a sense of whether it'll be between this 20 to 25% range and whether it'll be at the higher end of the range or the lower end of the range?
Yes, I think it will be between that range. It will be difficult to give out exactly on how exactly the quarter will pan out. But last quarter, we had around 23-24% growth, and we expect that growth to continue in this quarter as well.
Okay. I just wanted to get back. You said that, you're not seeing any kind of pain in your MSME book at this point in time or in terms of rural segment lending. So your asset quality ratios remain the same for the entire fiscal? What are you targeting or what are you guiding for when it comes to your gross NPAs and net NPAs?
NPA is range bound between 2.25 to 2.30, and NNPA is roughly 1.50. And our guidance has been on similar lines that our GNPA will be range bound between 2.25 to 2.5. We don't expect any adverse, movement over there as of now. And even the NNPA range bound between 1.5 to 1.6% as of this fiscal. That is what our expectation is.
Right. You guys recently raised about 150 crore via debentures, and you expected, your cost of funds to reduce because of credit rating upgrades, etc., which will come by as well. So, a two-part question. One, what are your targets for NIMs for the remainder of this year? And secondly, what kind of capital adequacy ratio are you at right now?
Right. Yes. So we raised 150 crores of NCDs. So that is a regular affair where we keep on touching the capital markets for diversifying our resource mix. So currently, majority of our lending is through the banking channel, but we are diversifying with, and the credit rating will also help in that. Currently, the borrowing cost is around 9.8%. We expect that over a period of next 2 to 3 quarters, this will slightly come down because of the credit rating upgrade. Our rates are linked to the MCLR, so they have to reset in order for the rate reduction to happen. And
how much will that come down by? You said it's 9.8% right now. It should come down in the next couple of quarters. That's point number one. And secondly, your borrowing mix. Where does it stand now when it comes to borrowing from NBFCs, borrowing from banks, and borrowing from the capital markets? If you could give us a sense.
So around 15% comes from capital markets as of now. Around 55% is from the banking channel. The rest is capital, and we have some tier 2 capital as well. So currently, we expect that the capital market portion should slowly and gradually start inching up. We also recently the capital adequacy is at 29%. We recently raised 500 crores in a QIP in June end, and that strengthened the capital adequacy, which earlier was around 23-24% to around 29% right now. And we expect around 5 to 10 bips reduction in cost of borrowing over a period of next 2 to 3 quarters, hopefully.
Okay, 5 to 10 basis points. What would that do to your net interest margins, which are above 5%?
So our NIMs that we maintain are close to 7.25%. We expect those to on between that. Between 7 to 7.5%, and ROA, return on asset after tax, to be range bound between 2.75 to 2.85% this year. That is the range that we are anticipating.
Okay, just quickly before we let you go, you've spoken about how you are extremely bullish on this entire year in your assets under management guidance, and as well as your net interest margins and cost of funds. If you had to pick out one challenge for the company, which you probably envisage in FY25, which would probably be the biggest challenge for you, what would it be?
I think maintaining the asset quality is one challenge. We are seeing some offshoots of a little bit of stress coming out in, it has started from the MFI segment, and unsecured was anyways under the radar since some time, where personal loan and all were facing certain challenges. But I think maintaining this asset quality, the way that we have maintained till now, it will be important for us to be disciplined on our lending, and at the same time growing, and also a disciplined approach. That is the biggest challenge that we see as of now. But other than that, overall the macroeconomic situation looks positive for the growth that we want to achieve.
Okay, all right, Mr. Gandhi, we're going to let you go on that note. Thanks very much for joining in and speaking with us. So that's Mass Financial. Let's shift focus to the oil and gas sector. A petroleum secretary has told CNBC Awaaz that oil companies can consider fuel price cuts if crude prices stay low for a long time. Also adds that oil ministry is in talks with the finance ministry with respect to the windfall tax. Listen in.
पिछले हफ्ता 10 दिन में ये बात सही है कि क्रूड प्राइसेस कम हुए हैं। अभी हम लोग देख रहे हैं कि इसका ये कितने समय तक क्रूड प्राइसेस कम रहेंगे, क्योंकि सिर्फ एक हफ्ते के आंकड़े देखकर कोई फैसला लेना उचित नहीं होगा। तो हमें अभी समय चाहिए इसमें देखना कि क्या ये जो एक ट्रेंड, एक जो रुझान देख रहे हैं, ये इस तरह चलेगा आगे, और तभी हम इसका इम्पैक्ट बता पाएंगे। क्योंकि हमारे जो अपनी प्राइसिंग जब होती है या अपना जब हम खरीद होती है, तो हम उसमें कुछ अधिक लंबे समय का डेटा देखकर ही कुछ आगे।
रशिया से जो क्रूड की खरीदारी होती है उस पर क्या असर पड़ रहा है इसकी वजह से, और जो दूसरी तरफ से जो ओपेक कंट्रीज की तरफ से जो प्रोडक्शन में कटौती की बात की जा रही है, उससे क्या इम्पैक्ट पड़ रहा है?
देखिए, प्रोडक्शन तो कटौती और अनाउंस नहीं करी है ओपेक ने। उल्टा वो उनका तो ये था कि शायद अक्टूबर में जो उन्होंने पहले कटौती की थी ओपेक ने, उससे वापस करने की बात थी पहले अक्टूबर से। अभी ओपेक ने ये कहा है कि जो अपना उत्पादन बढ़ाएंगे वो शायद 2 महीने बाद इस पर फैसला लेंगे, अर्थात दिसंबर में के समय तक फैसला लेंगे। अगर हम तो चाहते हैं कि उत्पादन बढ़े, क्योंकि डिमांड है, हमारे जैसे देशों से डिमांड तो है, और अगर उत्पादन बढ़ता है तो हम उसका स्वागत करेंगे।
रशिया से क्रूड से जो
तो रशिया से भी अगर उत्पादन और अधिक आता है तो हम उसका भी स्वागत करेंगे।
और सर, विंडफॉल टैक्स पे लगातार इंडस्ट्री की तरफ से मांग रही है कि चूंकि क्रूड प्राइसेस नीचे चले गए, तो क्या उस पर सरकार की तरफ से लगातार बातचीत चल रही है कि इसको हटाया जाए, अबॉलिश किया जाए?
विंडफॉल टैक्स जिस तरह से उसका कैलकुलेशन होता है, उसका एक मैकेनिज्म है, और ये डिपार्टमेंट ऑफ रेवेन्यू की तरफ से हमारी जो इसमें चर्चा हुई है डिपार्टमेंट रेवेन्यू से, वो चर्चा काफ़ी समय से चल रही है, और वो चर्चा भी आगे भी चलेगी। लेकिन इसमें आखिरी फैसला डिपार्टमेंट रेवेन्यू ही करता है।
हर 15 तारीख को रिव्यू होता है। जी, आखिरी सवाल सर, पेट्रोल की जो क्रूड की कीमतें गिरी हैं, उससे आम आदमी को कब तक राहत मिलेगी? ये एक बड़ा सवाल है सर।
हाँ, ये हमेशा एक सवाल रहता है, और इसमें अगर हमें थोड़ा सा विश्वास होने लगता है कि ये जो कमी है ये कुछ समय तक हम इसको देखें, और हाँ, इसको हमें भरोसा हो रहा है कि ये कमी रहेगी, तो मुझे जरूर उम्मीद है कि ऑयल कंपनीज इस पर कुछ ना कुछ तवज्जो देकर अपना सही फैसला करेंगे।
Welcome back. Well, the mid-caps are doing better today, so up around 0.8% currently for the mid-cap index. And we have the Bank Nifty, which is up around 0.3%. Just watch out for specific stocks such as Hero Moto, which is doing extremely well today. So up around 2.3%, giving Bajaj Auto Company, which is up around 2%. In fact, Bajaj Auto has picked up around 7.6% on a week-to-date basis itself, and has done fabulously well for the year, up around 71% year-to-date. But let's now bring you an exclusive conversation. Lata Venkatesh caught up with KV Kamath, the chairman of the NAB FID, on the sidelines of the NABFID Infra Conclave 2024, and discussed all about the ongoing infrastructure project financing. She began by asking about if there is a pickup in infra project financing after what was a lean period.
Yeah, two things have happened. Probably the worst was up to 2015, 2016, and today. For example, the default rates have dropped dramatically. It's now less than 1%. So you have credit-worthy borrowers on the other side of the picture. What was needed was long-term financing for these companies who are coming into the market now, borrowings. So far, banks were meeting their thing. They did a great job. But there's a natural misfit between a bank financing an infrastructure project and a long-term financial providing. And that is, infrastructure projects by nature are longer. And you have a bank where the average maturity of is 1 year or little over 1 year. So you're carrying a risk which has to be hedged and difficult to hedge. Enter the long-term fund. The long-term fund has a problem. Where is his source of funds? You remember the DFIs of the 90s?
Yes.
That was a problem. They didn't have the long-term. But today, with the development of the pension industry, the insurance industry, and even the mutual fund industry, you have a range of providers of funding to this. And we heard from SEBI that now there is a very active bond market in the country. Yeah, more innovation can be done, but there is already an active bond market. So in a way, NAFID is right in the middle of this. You quoted a number. Now, NAFID's approvals, I think up to the last month or so, put 1.5 lakh crores. And I would expect that to significantly increase, almost double over the next year and a half. Now, our capital is just 25,000 crores. If we take our net worth, maybe 30,000 crores. We have raised 30,000 crores. But to meet even what we already approved, we need another 90,000 crores, which will come from the capital market. So we are going to be there in bigger and bigger measure over the next 6 months to a year. And as our book builds, the approval book builds, we will be coming into the debt market even more to a more significant amount, so that we can meet the needs.
I will come to NAFID's own activities in just a minute. I still want to measure the ecosystem and its interest. For the first, your CEO Rajkiran Rai presented that for the first time we have a large amount of patient capital. If you look at insurance kitty plus pension funds, he pointed out it is 115 lakh crore. Bank deposits is about 210 lakh crore. And infrastructure and pension is growing at 20% nearly, whereas deposits are growing at 11%. So the catch-up will come. Do you see this insurance and pension fund taking interest in infrastructure? Because insurance by its very nature is less risk-prone.
Yeah, see, the idea was that if you can sit with these providers of funding and explain to them the risk profile of the assets that you are financing, then they are satisfied. But imagine that this sitting was happening 15 years back, where you have a very nascent infrastructure industry. It was not private or not public-private, it was still government, so not market tested. Then you have private companies come and market test, and there's a problem, the stranded assets of 2014. And why did that happen? Because a whole lot of problems which you had not anticipated hit you. Acquisition, environmental clearances, and so on, and delays and so on and so forth. All those have now been addressed, as a result of which what was peaked in probably 2016 at 5 or 6%, we're now talking of a little over 1%. Now when I think the patient capital, the owner of patient capital, or where it is resting today, looks at this, he looks at this as a good way to invest. He gets a higher rate of interest than a government security would provide him. And it is, he understands the risk that is there inherent in this. He is willing to put the money.
Do you think banks will move into infrastructure like they did, when you were at the helm of ICICI, the 2000 to 2010 period? The percentage of the bank's book in infrastructure was significant at that time. In corporate itself, it was significant. Now, 60% is retail for a bank book. Do you see them coming back or overcoming the blues of the previous decade?
2-3 things need to be seen. One is, what is the ideal asset mix for a bank? They are at a 1 year end of shorter loans, whether it is typically short cycle working capital loans or retail loans,
Yes.
which are typically resettable loans, are probably the ideal product.
Asset liability for match for them.
Then you need to probably round up your portfolio and have 15-20% in other assets which can be hedged. Again, you don't want to go 10 years, 15 years, not 15 years, but even 8 to 10 years
Yes.
with 1 year liability on your, or 1 year assets on your side, and take 1 year liabilities on your side and take a risk. So you will then run a balanced book, of which a small proportion will be term loans, either to industry, SME, or for infrastructure. So incrementally, the funding for long-term infrastructure projects will have to come from markets. And where will the markets get it is from this patient capital that is lying
It's from
there.
insurance.
With intermediaries like NAFID providing the initial approach, and then maybe the ecosystem gets built up as we go along.
Welcome back. You're watching us here on Halftime Report. Now, this is a special segment, Private Equity Corner, where we talk about investments in private equity, catch the trends early as we see it. And today, we're talking about decoding Bharat, which is basically, the hinterland of India, tier 2, tier 3 cities, etc. as well. Venture capital firm Axel will invest up to $1 million in pre-seed startups in AI as well as Bharat. To discuss this and more, we have Axel's Anand Daniel and Priyank Swaroop joining us. Thanks a lot, gentlemen, for joining in. First up, the Axel Atoms 4.0 fund that you've launched. Wanted a little more on this. What is the size of the opportunity that you see on, in Bharat itself? What are the key portfolio areas that you're looking at, the ideas? And if you could, delve into the challenges of scaling up in Bharat as well. Anand, go first.
Awesome. So thanks for having us, Mangalam. So the Bharat opportunity, as we see it, is a pretty large one. As India scales from 3.5–4 trillion to 8 trillion over the next decade, we feel a lot of that is going to be digitally led, the growth of the market, as well as a lot of it is going to come from Bharat. What we call as Bharat is the tier 2, 3 and beyond rural villages. And we feel there's a lot of market cap creation opportunity if you go after these opportunities. If you take India overall, if you look at the GDP to market cap, it's almost at a 1:1 ratio. When 4 trillion new market cap gets added, we feel at least 4–5% of that is going to be digitally influenced in Bharat, which is 200 billion or more of opportunity for founders to build amazing solutions for this audience.
Okay. Anand, if you could just narrow down in terms of specific ideas or a pipeline that you're looking at when it comes to this Bharat opportunity, things that you might be interested in or on the anvil in terms of investment?
Awesome. So that's a great question. So I think there are 4 or 5 areas we are excited about. If you take the consumer in this category, they aspire to spend in the same categories as Metro and Tier 1. And if you look at retail, can they get better on the food side? Can they get better grocery, FMCG experience? If you take non-food, can they get equivalent experience in fashion, beauty, personal care? So the Bharat consumer wants everything that, at the higher end of the Bharat consumer wants everything that the Metro and Tier 1 consumer wants. That's one. The second area I would focus on is financial products, be it wealth products, maybe in a physical format, insurance, or the traditional lending. Third would be education upskilling. Can we ensure that the people from Bharat get high quality education and can get better employment opportunities? And then the last one I would add is probably the content, be it entertainment in regional languages specific to Bharat, or be it astrology and other areas where people spend time. These are probably 4 areas. Maybe the ancillary areas, consumer brands created for Bharat would be the 5th area if I had to add one more.
All right, so consumer brands created for Bharat, the financial aspect of it all, the retail aspect of it all, you're looking at education and you're also looking at content for Bharat as well. Very recently, one of the companies, Apps for Bharat, secured some funding coming in from Nandan Nilekani's fund as well. Priyank, from the current portfolio of investments that you have, which ones would you say are, catering to Bharat, and which are the ones which you believe that, can actually scale in Bharat beyond the metros right now?
So I think, thanks, Mangalam, for having me. So with respect to the intersection of Bharat and AI, let me take that as a thought process one. So we have a company, for example, called Arivihan, which recently had a lot of success in the MP state boards. They provided personalized education to students for doing well in the exams. So imagine like a personal tutor who does not get irritated, upset, and adapts to the student and understanding what the student is trying to understand and keeps on explaining with multiple examples the same concept. So that is one of those companies which is right now serving the hinterlands of Madhya Pradesh, but tomorrow they can serve actually any student in India, anywhere in the world, anywhere in India. So that is one example of a company which is what you're asking for. More importantly, I think in terms of Bharat, a lot of, like what Anand mentioned, there are a lot of aspirational customers. So it's not that just a brand can start in Bharat, but they can go globally, or they can start from the tier 1 markets and then go to Bharat. So we've seen those examples as well.
Okay. Priyank, if you could just highlight any of your investments currently which could probably go to market. You have a whole array of them. Book My Show, Browser Stack, Flipkart, Freshworks, CureFit, Mensa Brands, Myntra, Swiggy, which would probably be the most in terms of interest here. But which ones would probably hit the markets, the public markets soon?
Anand, you want to talk about it?
Yeah, all these are good scale companies which are ongoing at different scales of evolution, right? So as you know, we feel many of these are getting ready. As you already know, Freshworks is already a public company.
Yeah,
and
except for Fresh.
many of these are getting gearing up, and we feel good about how the portfolio is shaping up. But unfortunately, can't get into details here.
Let's bowl a bouncer at you, Anand, because Swiggy has filed papers confidentially for the IPO. The reports that we have right now, they're looking to upsize that by issuing a component of fresh issue as well, as against just an offer for sale. So is that true?
Bouncers are meant to be ducked, I think. I need to do a duck on this one, right? So unfortunately, I won't be able to comment on anything regarding that at this time.
Okay, but give us a sense in terms of what kind of gains are you probably sitting on in terms of your investments, say on an average across this portfolio that you have?
Yeah, that's a good question. See, I think most of these companies, right, from a Flipkart or you mentioned Swiggy and everything, we were the first seed investors in these companies, which means less than when we got in the company, had 2 people in an idea or a very small team. So we're the first check in many of these, which means our value when we got in is, and on a $1 million basis, would be less than 10 million or so, if I were to pick a number, when we got in, right? So, and then obviously the company raises many rounds of capital and scales. So it's not like we're targeting any one particular thing. Venture capital, as you all know, is for high risk, but if it works out, can it be a very large outcome? And that's the whole premise here.
A one-word answer before we let you go, running out of time. What's the MOIC that you expect on Axel Atoms 4?
Wow.
Priyank.
Well, I think the way we think about this is if we can find any number of amazing companies, we'll invest as much as possible. And like Anand mentioned, we're entering these companies very early, pre-seed. So, I mean, the sky is the limit, to be honest. Right? So I think there is no, I mean, the answer is like infinite, actually. So,
all right, take that point. Infinite opportunity in Bharat and perhaps for investors as well. Wish you all the luck. Yeah, Anand, you were making a point.
Sorry, last point is we're looking for the next Swiggy or Flipkart or Freshworks. So these can change the way India and globe operates. So those what we're not worried about MIC or anything like that. We're truly looking for awesome founders trying to change the world.
All right, so if you have a good idea, up to, on September 16th is when they invite applications. Axel Atoms 4 is, a platform that they're looking at investing up to $1 million in each of these Bharat and AI-focused companies itself. Thanks a lot, gentlemen, for joining in. Good ideas coming in and good opportunities, perhaps, hope on the other side as well. But on the other side of this short break, we'll talk about markets and a lot of stock-specific action. Stay tuned.
Welcome back. Well, for the markets, the mid-cap index is up around 0.9%, so outperforming at this point in time. Just want to pull up Granules because that seems to really be the stock in focus today from the pharmaceutical space. It's seeing a sharp deceleration after those 6 observations became public. And it really highlighted the issues that it is facing in one of its facilities. In fact, if you just go through the Form 483, you'll assess that there are a lot of quality unit issues that were brought up by the US FDA regulators. And according to some analysts, it probably even points to some amount of data integrity concerns. And hence, it could be a long road ahead for Granules to probably solve these issues in their facility. And that's the reason why you're seeing that double-digit loss come in on Granules at this point in time. Otherwise, for the markets, it's stable. We have Nifty, which is up around 60-odd points, and the Sensex up around over 100-odd points. We'll take a break, but up next, we'll focus on the commodity segment. Stay tuned.
Welcome back, and joining us on the show now is Mr. Mahesh Palawat. He's VP Meteorology and Climate Change at Skymet Weather Services. Mr. Palawat, hi, thank you so much for joining us. We do know that September is the most important month when it comes to crops because most of them are a few feet higher in flowering and fruit as a situation there. And with the kind of monsoon or the rainfall that we still are seeing isn't always the best in that sense. Even as the cropping numbers have been on the stronger side, the concerns are about now damage and yield there. How are you looking at the rest of the September going forward from now?
See, Manisha, this is the last weather system, intense weather system we are witnessing over southwest Uttar Pradesh. Earlier, it has already dumped heavy to very heavy downpour over most parts of Madhya Pradesh. In terms of, say, more than 100 millimeter, between 100 and 150 millimeter. And now it is moving slowly in north direction towards Uttarakhand. So for next 24 to 48 hours, we think that western parts and central parts of Uttar Pradesh will get heavy to very heavy rain, and Uttarakhand may witness extremely heavy rainfall with chances of cloudburst and landslide, mudslide. And Delhi NCR, parts of East Haryana and southeast Punjab may also witness moderate to heavy showers for next 24 to 48 hours. So, and another low pressure area is also developing over Bangladesh, South Bangladesh. It will be merging with this weather system soon. So we can say now the rain activities will be over Indo-Gangetic plains, right from Uttar Pradesh, Bihar, Jharkhand, West Bengal, and parts of Orissa. These areas will continue to get decent rain for another 3 to 4 days. However, after 2 to 3 days, western parts of Uttar Pradesh will start, the rainfall will start receding from that area. But we do not accept any significant rain activity over Punjab, western parts of Haryana, West Rajasthan, Saurashtra and Kutch, and parts of Gujarat now. Yeah.
Okay. Mr. Palawat, also, this is a longer monsoon as has been predicted by IMD and Skymet as well. So when do we start seeing a withdrawal of these monsoon now?
They already, this anticyclone is forming up over central parts of Pakistan. And that's why this particular depression has not moved towards Rajasthan or Gujarat like earlier one. But it is recurring because the westerly, strong westerly and northwesterly winds are pushing it, and it is they are not allowing it to move in westerly direction. That's why it is recurving in northeast direction towards Uttarakhand. So we can say anytime after, say, normal date is withdrawal of normal date of withdrawal is September 17, and by September 17 plus minus 2 to 3 days, we think that monsoon will start withdrawing from western parts of Rajasthan and gradually over this East Rajasthan, Punjab, Haryana, and Gujarat. So it will be on time.
Okay. And how would you look at the monsoon overall until time? We do understand that it was a normal monsoon prediction. What is the status right now? How do you see September ending?
September will also end on a surplus note because we have seen already monsoon is surplus by 8%. And as we move forward, the average daily average rainfall will also reduce. And now for next 2 to 3 days, there will be heavy to very heavy rainfall. That's why it may climb up to 9%. And after, if rainfall start reducing over western parts of the country, but still the central and eastern parts will continue to get decent rain for next week or so. That's why we think that this monsoon will end in the upper side of normal, or most probably above normal, in the tune of, say, 107% or 106%.
All right. Mr. Palawat, also, how would you look at Maharashtra right now, Mumbai for that matter? Would you say the monsoon more or less is done, and are we ending towards the end of this?
Yes, yes. Now we have seen the light to moderate rain was continuing over many parts of Konkan and Goa, including Mumbai and parts of Vidarbha, North Maharashtra. But now we think that it may be the last spell. Because now rain activities have already reduced over Konkan and Goa, including Mumbai. So after, say, 3 to 4 days, monsoon rains will be very, very less over Mumbai. But withdrawal will take place after, say, mid-September or last week of September. But we do not foresee any decent rain or good rainfall over Mumbai now. Yeah.
All right. Mr. Palawat, final thing, and there were also initial forecasts on how some of these rainfalls could continue well into the month of October as well. How are you looking at October rains going forward?
I say monsoon withdrawal will be on time, and gradual withdrawal will take place from most parts of the country by end of September. And usually complete withdrawal of monsoon takes place after around October 15. But after withdrawal, if any rainfall, it is normal. When monsoon withdraws, then also the chances of rainfall will be there. But we do not foresee that it will be extended monsoon over for northwest and central parts of the country. However, east and south peninsula may continue with light to moderate rain in the October as well. Yeah.
Fair point that. Mr. Palava, thank you so much as always for joining us and giving us a very detailed sense on what to expect from the rain gods there. So, well, yes, we are 8% above normal in sense of rainfall right now. The next 4 or 5 days could see heavy rainfalls around Uttarakhand, UP and in some parts of Delhi NCR. But the rest of the country clearly can sit back, relax, because it's going to be weak showers, and this is perhaps the last showers of the monsoon that many of us would be getting, especially in Maharashtra. But with that, that's all the time that we have on the show. Stay tuned, because Business Lunch will take all the action forward.